Hello class, good day. Welcome to this lecture. For this topic, we are going to discuss audit of investment securities, in particular, debt investments. Our outline for this discussion will be number one, review of the classification summary for financial assets. So followed by measurement summary for financial assets. And then finally, we are going to answer illustrative problem showing typical transactions affecting debt instruments, including acquisition, measurement, subsequent measurement, and disposal of debt investments. So let's go. Here's the measurement summary in accordance with PFRS 9, which happens to be our main standard for accounting for financial instruments. There are three main categories of financial assets under these standards. We have the first one, financial assets at amortized cost. We also have financial assets at fair value through other comprehensive income or OCI, and financial assets at fair value through profit or loss. Now, the classification requirements under PFRS 9 will depend on two main criteria. First one is the cash flow characteristics, and another one is the business model of the entity for managing the financial assets. As for cash flow characteristics, to be classified as amortized cost and FVOCI, the investment should follow the structure or the cash flow structure of the instrument should follow a basic lending requirement. So which involves cash flow consisting only of principal and interest payment. So that's what SPPI means. So that means sole payment of principal and interest. So for if the instrument is consistent with basic lending agreement, it can be classified as amortized cost investment, fair value through OCI, as well as fair value through profit or loss. However, if the instrument has a other features no beyond sole payment of principal and interest, like for example derivative-like feature, they cannot be classified as amortized cost or FBOCI. They can only be classified as FVTPL. So FVTPL consists of instruments that may contain SPPI, sole payment of principal and interest, and those instruments that has cash flow characteristics beyond SPPI, like derivatives. Now, as to what we call this business model for managing the financial assets, if the entity's business model is to hold the instrument for collection of contractual cash flows consisting of principal and interest, then that would be classified as amortized cost. So under amortized cost, the business model is held for collection. But if the business model is to collect the contractual cash flows and at the same time, it is also available to be sold no, or for sale when needed by the company, then the business model is held for collection and for sale. And that ceases to become amortized cost investment. It becomes FBOCI. So for FBOCI, it's held for collection and for sale. So finally, if the business model is other than for collection or for sale, then the classification will be FVTPL or fair value through profit or loss. Examples are those instruments that are held primarily for the purpose of being traded. And then as to the type of the instrument that would qualify under each category, for amortized cost investment, only debt instruments would be qualified to be amortized cost instrument. For FBOCI, debt and equity is allowed. So especially under equity, if the entity designated the instrument as FBOCI irrevocably, then that would be also be classified as FBOCI. For FVTPL, debt and equity is also available. So debt or equity would be available as well. So that is the summary of classification of financial instruments under PFRS 9. So next, let's talk about measurement summary. Now, let's talk about measurement of financial asset, focusing on initial measurement, subsequent measurement, and the treatment for the changes in fair value in between recording periods. Now, let's talk about financial asset at FBTPL. For financial asset at fair value to profit or loss, they are initially measured at fair value. So, fair value excluding transaction cost. Any transaction costs incurred on the acquisition of the asset are recognized immediately in P&L or in profit or loss as expense. Now, what is fair value? So fair value in accordance with PFRS 13, which happens to be our standard for fair value measurement, is the price that the seller would receive to sell an asset or to pay to transfer a liability in an orderly transaction between market participants at the measurement date. And according to the same standard, there are different levels no, of fair value. The most reliable measurement is the one that comes from a quoted price in a market exchange. So example of that would be the price in a securities exchange like the PSE or the Philippine Stock Exchange. Now, for subsequent measurement, financial asset at fair value through profit or loss are measured also at fair value. So any changes in fair value will be recognized in profit or loss. So as either fair value adjustment gain or fair value adjustment loss. So that is equivalent to what we call unrealized gain or loss. So because these gains or these gains no or losses are recognized for the assets that are still retained as of the reporting date. So this is different from the gain or loss that the entity would recognize if they sell the asset or dispose the asset. For fair value through OCI or FVTOCI, it is initially measured at fair value plus transaction cost. So this time, transaction cost is capitalized as part of the cost of investment. Unlike in FVTPL, where it is wherein no, it is expense as incurred. Now, by the way, we defined earlier what fair value is. So transaction cost naman on the other hand are the cost directly attributable or incurred to acquire the asset or the liability. So like for example, uh, commissions no, or levies by regulatory agencies or transfer taxes. So these costs are unavoidable and would not have been incurred if the entity had not acquired or disposed of the asset. So in case it is avoidable, like for example, internal management cost or administrative cost, so they are not considered transaction costs and therefore they cannot be capitalized to the cost of the investment. Now subsequently, FBOCI are measured at fair value only. So this time without transaction cost component, and any changes in fair value is recognized in other comprehensive income and accumulated in shareholders' equity. So the changes is recognized in other comprehensive income statement and it will be accumulated. No, yung cumulative gains and losses will be presented in the company's shareholders' equity. So usually as a separate component of the shareholders' equity. So finally, for amortized cost investment, it is initially measured at fair value plus transaction cost also, similar to FBOCI, fair value plus transaction cost, and subsequently measured at amortized cost using the effective interest rate method. And this time, the changes in fair value are not recognized in the financial statement. So since subsequently, investments are recognized at amortized cost. So when we say effective interest rate method, so this is the interest rate that will exactly discount the future cash flows arising from the investment back to its original carrying amount. Now, let's answer an illustrative problem related to acquisition, measurement, and disposal of debt securities. So here is the background of our problem. Background of our problem, our client acquired 1 million worth of 8% bonds for 924,164 on January 1, 2022. So that price is already inclusive of commission of 50,000 pesos. So that commission is an example of a transaction cost. Now, the bonds were acquired to yield 10% and the interest is payable annually every January 1. So the bond matures in 5 years. So let's go over first with the requirements of the problem. So the requirements here is to provide the journal entries for each investment classification, investment at amortized cost, financial asset at fair value, through profit or loss, and financial asset at fair value through other comprehensive income. So on each of the following transactions. So letter A, the acquisition of the investment on January 1, 2022. B, accrual of interest on December 31, 2022. C, amortization of premium or discount on December 31, 2022. Fair value adjustments on December 31, 2022, and the carrying amount of the investment as of December 31, 2022. So we are also asked to calculate the gain or loss and journalize the disposition transaction or disposal transaction if the investment is sold at December 31, 2023. Now let's go back to the details of the problem and identify the relevant information. So going back, so this 1 million here is the face amount or the face value of the investment, while the 8% interest is the nominal interest. So nominal or stated interest. So 924164 is the purchase price, so which happens to be the fair value or which includes the fair value of the bonds at the date of acquisition. But this time, it doesn't only include the fair value because as mentioned in the problem, this includes commission of 50,000 pesos. So therefore, the fair value of the bonds is only 924164 less 50,000 pesos. And it says here that the bonds were acquired to yield 10%. So 10% is considered as the effective interest rate. So the interest is payable annually. So that will also determine the period of amortization. And it is payable every January 1. So the maturity period is 5 years. And given here is the quoted price as of December 31, 2022 and December 31, 2023. So which is 98 points and 99 points respectively. So meaning to say the pair value is 98% of its face amount as of December 31, 2022 or 980,000 and 99% of the face amount on December 31, 2023 or 990,000. So that would be relevant in the calculation of their subsequent measurement at each of those reporting dates. Now, going back to the effective interest rate, so the problem says that 10% is the effective interest rate. So it will influence the calculation of the amortized cost at subsequent period. So if the effective interest rate is 10%. And remember earlier that effective interest rate is the discount rate or the interest rate that will exactly discount the future cash flows. When we say future cash flows, the principal and interest payment back to its original carrying amount. Now, for investments at amortized cost, remember that the initial carrying amount is equivalent to fair value plus transaction cost, which is exactly 924164. So because it was the purchase price, including the commission of 50,000 pesos. So therefore, when we try to discount the face amount and the 8% nominal or stated interest using 10%, we should get exactly 924164. So that is very important for us to be able to populate this amortization schedule. So because this amortization schedule is helpful or necessary to answer some of the requirements, especially related to advertised cost investment and FVOCI investment later on. So let's calculate first the initial carrying amount of the investment. So using effective interest rate of 10%. Okay, so let us compute the initial carrying amount. So to compute the initial carrying amount, we have to discount the future cash flows consisting of principal and interest using the effective interest rate of 10% for 5 periods. And take note, according to the problem, so we shall discount the interest, the present value factors rather, to 4 decimal places. And we shall follow that. So computation of initial carrying amount. So initial carrying amount. So we need the present value of principal and interest. So present value of interest. So principal is 1 million multiplied by the present value factor of 10%, the effective interest rate, for 5 periods. So let's compute. So 1 plus interest rate, so 1.1. So divide using your ordinary calculator. And 5 periods, we have 1, 2, 3, 4, 5. So 0.6209. So 0.6209. So that would be 620,900. plus present value of interest. So to get the present value of interest, we get the face amount 1 million multiplied by the nominal interest rate. So the nominal interest rate here is 8%. So multiplied by the present value factor of annuity of 1 for 5 periods. Because unlike the principal, the interest is payable each year for the 5 years. So we need the present value of annuity instead of the present value of 1 only. So to get the PV of annuity of 1, so we can use the PV of 1 we have calculated earlier, 0.6209. So without rounding off in your calculator, so you have to deduct 1 minus 1 and divide it by the percentage, 0.1 or 10%. So ignore the negative sign. So the present value factor of annuity of 1 for 5 periods at 10% is 3.7908, rounded off to the 4 decimal places. So 3.7908. So let's compute 1 million. So 1 million multiplied by 8% multiplied by 3.7908. So we get 303,264. So 303,264. So therefore, so 303,264 plus 620,900 equals 924,164. So 924,164. So as you can see, this ties up now to the initial purchase price plus commission earlier of 924,164 in the problem. So for FVOCI and amortized cost investment, so this is the initial CA 924,164 with effective interest rate of 10%. And with that, we can populate our amortization table here. So to populate the amortization table, we start with the initial carrying amount of 924,164. So the procedure is to compute the effective interest and the nominal interest. The difference between the effective and nominal interest is the discount or the premium amortization. So since the bonds were acquired at lower of its initial of its face amount or face value of 1 million pesos, so it is said that the bonds were acquired at a discount. So if the investment in the securities are acquired at a discount, the effective interest rate is higher than the nominal interest rate. So that is why 10% is higher than 8%. So had the investments been acquired at a premium, then the effective rate would have been lower than the nominal or stated interest rate of 8%. And the initial carrying amount would be higher than the face amount of 1 million pesos. Now let's compute. Effective interest rate is previous carrying amount multiplied by effective rate of 10%. So 924,164 times 10% would be 92,416. So this is 92,416. So the nominal interest rate will always be 8% of 1 million pesos. So 1 million times 8% is 80,000 pesos. So the difference would be the discount amortization. So we have 92,416 minus 80,000 is 92,416 less 80,000. And so 12,416. And to compute the new amortized cost, so we have to add the discount amortization from the previous carry amount. So if it's premium, you deduct it from the previous amortized cost. So because the objective is that at the end of the 5 years, the amortized cost or carrying amount should go back to its face value of 1 million pesos. So therefore, 12,416 plus 924,164, we have 936,580. And we should follow the process until we complete the table. We follow the same process for the succeeding years. Now, for example, for the second year, 10% of the previous carrying amount of 936,580 is 93,658. The nominal interest would remain the same for all the years. Then the discount amortization for the second year is 936,658 less 80,000, which is 13,658. Then you add it from the previous carrying amount of 936,580. So to get 952,380. So we follow the same process until the last year. So we're in instead of getting the 10% of 981,788. So since our goal is to close the amount of the carrying amount to 1 million pesos equal to face amount at the very last year, so we shall get the difference between the two. So that is 981,788 minus 1 million pesos. So we get 18,212. So 18,212 should be the required amortization for the last year. So add it back to the nominal interest rate of 80,000, you get 98,212. So as you can see, it's not exactly equal to the 10% of 981,788 because it's 98,179 instead of 98,212. So we just did that because if we follow along our previous procedure, it would not go exactly to 1 million pesos. So there will be a slight difference from 1 million pesos just because we used earlier 4 decimal places as our present value factor. So it would result later on to rounding off difference. So this is an acceptable practice so for discussion purposes. So in this case, this will be our computation of the amortization table for 5 years. So this table will be convenient for answering some of the requirements later on. So let's answer the requirements. We'll have 3 columns, no, for each of the categories of financial asset, and we'll go along with the journal entries for each of the requirement from A to F. So let's go for the first one. Entry to acquire the investment on January 1, 2022. Requirement A, acquisition of the investment. So this time for amortized cost investment. So we have the date, January, sorry. So we have January 1, 2022. So since this is amortized cost investment, the initial measurement is fair value plus transaction cost. So let's use the account debit that investment in amortized cost. So again, the account title could vary. So depending on the chart of account of the company. So this time, let's assume we'll use that investment in amortized cost 924,164 and credit cash 924,164. So remember, 924,164 earlier was the purchase price inclusive of the commission of 50,000 pesos. So we'll use 924,164 as the initial carrying amount of the investment in amortized cost. Next is still requirement A, but this time FVTPL or fair value through profit or loss. So remember, for FVTPL, the initial measurement is limited to fair value, excluding the transaction cost. So therefore, January 1, 2022. So debit that investment in FVTPL. So this time we deduct from 924,164 the transaction cost of 50,000. So because the 50,000 should be recognized initially as expense or immediately as expense. So 924,164 minus 50,000, we have 874,164. So 874,164. Then the transaction cost will be recognized in P&L. So let's use commission expense. So this commission expense is recognized in profit or loss statement. 50,000 and credit cash 924,164. So you can see the difference here. The transaction cost was immediately recognized in profit or loss as expense. So instead of being capitalized in the initial cost of the investment. Finally, for FVTOCI, the initial carrying amount is also fair value plus transaction cost, similar to amortized cost investment. So this time, the amount or the initial amount is similar to the AC investment earlier, 924,164. So January 1, 2022. So debit debt investment in FVTOCI 924,164 and credit cash 924,164. So to recognize the acquisition of investment in FVTOCI. Now let us proceed to the next requirement. Requirement B, accrual of interest on year-end December 31, 2022. Now take note for accrual of interest. So this is necessary because the interest payment date is January 1 of the following year or subsequent year. So therefore, by December 31, 2022, there is a need to accrue the interest receivable and recognize the interest income. Okay? Now, take note also that accrual of interest will always be based on the nominal interest rate multiplied by the face amount of the bond investment. So 1 million multiplied by 8%. So on December 31, 2022, so debit interest receivable. So again, calculated at face amount and nominal interest rate. So nominal interest rate is 8%. So that would be 80,000. Credit interest income. So interest income is recognized in profit or loss or P&L, also 80,000. And this would be particularly true in each type of the instrument, whether FVTPL and FVTOCI. So we will have the same entry related to the accrual of interest. Okay, so as you can see in FVTPL, we have the same debit interest receivable 80,000 and credit interest income 80,000 pesos. Finally, in FVTOCI, same entry also, debit interest receivable 80,000 and credit interest income 80,000 pesos. Next requirement, we have amortization of premium or discount. So first, with amortized cost investment, so it is necessary to increase the carrying amount of the investment. So since this is a discount position, and also recognize the additional interest income to reflect the correct interest income, so which should be equivalent to the effective interest during the period. Okay? Now, for investments at amortized cost, interest income is calculated at the previous carrying amount multiplied by the effective interest rate. So as you can see, the previous carrying amount was 924,164 and the effective interest rate is 10%. So the interest income during the current year should be 92,416. So but remember, with the accrual entry earlier, we only recognize interest income amounting to 80,000 pesos. And there is also a need to bring the balance of the debt investment to 936,580 from the previous 924,164 since the subsequent measurement of investments at amortized cost should be at amortized cost using the effective interest method. So therefore, to recognize the discount, amortization of discount, and the additional interest income, so the entry on December 31, 2022, additional entry is debit debt investment in amortized cost. So to increase the balance of the investment from the previously recognized 924,164 to 936,580, so that is 12,416 or 12,416. So the amortization of discount is consequently the difference between the effective interest and the nominal interest. So this one. So 92,416 less 80,000 is 12,416. So this is the amount or the basis of the amount of 12,416. And credit interest income to be recognized in profit or loss. 12. So 12. 12,416. So that after this entry, the total interest income is 80,000, the amount originally recognized as part of accrual of the interest, plus the amortization of discount 12,416 equals 92,416. So which is the effective interest during the year. However, take note that amortization of premium and discount would only be applicable to amortized cost investment as well as FVTOCI investment. For FVTPL, amortization is not relevant. Actually, in FVTPL, interest income is recognized equal only or limited only to nominal interest. So unlike in AC investment, amortized cost investment, and FVTOCI investment, where the interest income should equal to effective interest, for FVTPL investments, interest income is only equal to the nominal interest. So therefore, for requirement C in FVTPL, answer is no entry necessary. So if the question is how much is the interest income for FVTPL investment, so our answer is 80,000 pesos, equivalent to nominal interest for the year. And then finally, for FVTOCI investment, so similar to amortized cost investment, amortization is once again relevant. So therefore, the entry is very similar for amortized cost investment. So the only difference is the account title. So instead of debit that investment amortized cost, so we debit that investment FBTOCI to recognize the increase in the carrying amount. So 12,416, which is the amortization amount. Again, the amount of amortization is based on effective interest rate. So the amount should be the same with the amortized cost investment. And credit interest income, which will also be recognized in profit or loss, 12,416. So for FBOCI investment, the total interest income would also be equivalent to the total effective interest rate. So under the effective interest rate method, which is 92,416. Now, next requirement, we have fair value adjustment at year end, December 31, 2022. First, for amortized cost investment. So earlier, we have discussed now that fair value adjustment is not recognized for amortized cost investment. So for amortized cost investment, requirement D, no entry. So because it's not applicable. So since amortized cost investment is subsequently measured at amortized cost, so instead of fair value. This time for FVTPL investment, so since the subsequent measurement is at fair value, and the initial measurement is also at fair value, then the changes in fair value is recognized, this time in profit or loss. So let us compute first the fair value adjustment on December 31, 2022. So to compute, we need the fair value on December 31, 2022. So which is based on this quoted price, 98 points. So 1 million multiplied by 98% is 980,000. Less the initial carrying amount or the previous carrying amount. So since this is the first year, so the previous carrying amount is the initial CA. So the initial CA or initial carrying amount as of January 1, 2022. And for reference, no, earlier we recognized it at March 874,164. So which is that 874,164. So this is a gain. So considering there is an increase in fair value from 874,164 going to 980,000. So let's compute 980,000 less 874,164. So fair value adjustment is 105,863. So we have 836. 836. Yan. So 105,836. So to be recognized in PNL. So this will increase the carrying amount of the investment, no, as well as gain in profit or loss of 105,836. So let's journalize December 31, 2022. Debit debt investment in FVTPL 105,836 and credit fair value adjustment gain. So to be recognized in profit or loss 105,836. Okay. So other account title could be also unrealized gain in P&L. So here, let's just use fair value adjustment gain in P&L. So sometimes in companies, they will only have one account title to recognize both gain or loss. So it would have been fair value adjustment gain or loss. If it's credit, so that means it's a gain. If it's debit, then it's a loss. So this will be our entry for FVTPL. Finally, for FVTOCI, there is also a fair value adjustment. So since subsequently, FVTOCI investments are measured at fair value, and changes in fair value is recognized this time in other comprehensive income. So based on our summary earlier. So let us compute first the fair value adjustment. So basically, it's different from FVTPL since they have different initial measurement as well as the treatment in the amortization, which affects the carrying amount of the investment, would also be different. So therefore, for computation of fair value adjustment, so computation of fair value adjustment, so under FVTOCI, so we have the fair value as of December 31, 2022. So similar earlier to FVTPL, which is 98 points. So face amount times 98 or 0.98. So this is the quoted price of the bond as of December 31, 2022. So we have 980,000 pesos. Less carrying amount before fair value adjustment. So to compute the carrying amount before fair value adjustment, so let's start with the initial CA. So the initial carrying amount. So for reference, let's go back to our entries earlier. So it's 924,164. So that's 924,164 plus amortization of the discount. So if you will trace our entries in FVOCI investment, there is another entry that affects the investment account, which is the amortization earlier for the interest, no, debt investment FVTOCI debit. So that would increase the carrying amount. So amortization of discount. So which is 12,416. So before adjustment, so there is a carrying amount adjusted to 924,164 plus 12,416. We have 936,580. So there is also a gain. So since 980,000 is higher than 936,580. So let's compute 980,000 minus 936,580. So 43,420. So this is the fair value adjustment gain for FVOCI investment. So this will increase the carrying amount of the investment since this is a gain. So entry on December 31, 2022. So debit debt investment FVTOCI 43,420 and credit fair value adjustment gain. So this time, it's no longer in P&L, but rather it will be recognized in other comprehensive income. So we have 43,420. So this will be our answer for requirement letter D under FVOCI investment. Now let's go to requirement letter E, carrying amount on December 31, 2022. For amortized cost investment, there are two ways to answer this requirement. So the first one is to refer to the amortization table. So we have carrying amount on December 31, 2022. So since for amortized cost investment, subsequent measurement is equivalent to amortized cost using the effective interest method, so we can refer to the amortization table. So on December 31, 2022, the amortized cost is 936,580. So therefore, our answer is simply 936,580. So the second way is to trace the entries affecting the investment account. So looking at the journal entries, so the initial acquisition was a debit for 924,164, and another entry affecting the investment account was the amortization of discount, which is 12,416. So if we add that, 924,164 debit initial acquisition plus amortization 12,416, we also get the same amount. So answer requirement letter E, 93658. So equivalent to amortized cost at year end. Now for FVTPL investment, so the carrying amount is equal to the subsequent measurement, which is at fair value. So on December 31, 2022, the fair value is equal to 98 points or 980,000. So hence, that will also be our answer for requirement E on FVTPL investment. Now, if we trace the journal entries affecting FVTPL investment, so we start with 874164 debit, this one. So 874164. And then the another entry that affect the investment account is the fair value adjustment on year end of 105,836. So plus 105,836. So equals 980,000 pesos. So which is also the fair value at December 31, 2022. Finally, for FVTOCI investment, the subsequent measurement is also equivalent to fair value at year end. So which is once again 980,000 pesos. So our answer requirement E for FVTOCI is 980,000. Now, if we will trace it on the entries from the very beginning, acquisition of investment 924,164 plus or minus entries affecting the investment account. So requirement B does not have entry on investment account. Let's skip that one. So requirement C, debit 12,416 investment account. So plus 12,416 on investment account. And requirement D, debit 43,420. So plus 43,420. So that's the last entry affecting the investment account. So upon checking, it is also equal to 980,000 at year end. Finally, we are down to our last requirement, requirement letter F. Compute the gain or loss and journalize the disposal transaction, assuming the investment is sold at December 31, 2023, or at the end of the third year. Now, let us further assume that the selling price is equal to the quoted price plus accrued interest. So, meaning it was sold at 99 plus accrued interest because remember, interest is payable every January 1 of the following year. So by December 31, 2023, the company would have already accrued for the interest receivable and the interest income. So let us compute for amortized cost first. Okay, now before we account for the disposal of the investment, so let us update first the entries for December 31, 2023 before the sale. So similar to what we did earlier in the previous requirements, no? So some of the entries on December 31, 2023 will include accrual of interest. So to record the accrual of interest on December 31, 2023, So it will just be the same with our previous entry, debit interest receivable. 80,000. So remember, accrual of interest will always be equal to the nominal interest rate. And credit interest income, so which will be recognized in profit or loss, 80,000 pesos. And then to update the amortization, so this time the relevant one is the amortization for 2023, no? So the amortization for 2023, so this one is 13,658. So debit that investment in amortized cost. So because as per our discussion earlier, discount amortization will increase the carrying amount of the investment. So 13,658 and credit interest income. So interest income is recognized in P&L 13,658. So which will make the total interest income for 2023 equal to the effective interest of 93,658. So 80,000 plus 13,658. And then for fair value adjustment, so it's not applicable for amortized cost investment. So we can now compute for the gain or loss. So for the gain or loss, let's compute first the total proceeds. So remember, the total proceeds is equal to the selling price of 0.99 or 99 points plus the accrued interest. So there is an accrual of interest, or there is an inclusion of accrued interest to this total selling price. So because the bonds were sold between interest date, because the interest will have been paid the following year, January 1, 2024. So therefore, as of December 31, 2023, the buyer now will sell the investment, in this case our client, will include, or the selling price will include, the accrued interest of 80,000 pesos. So fair value of the investment on December 31, 2023, which is 1 million multiplied by 99. So remember, this is on our given earlier. So this is the quoted price of the investment on December 31, 2023. So we have 990,000. So plus accrued interest, which is 80,000. Then the total proceeds would have been 1,070,000 or 990 plus 80,000. However, for the computation of gain or loss, it will not include any accrued interest. So for computation of gain or loss, so that would be net proceeds. So net proceeds will be equal to the total proceeds of 1,070,000 less accrued interest of 80,000 pesos. So which will be 990,000 once again. So we just showed the computation of the total proceeds because this will be relevant later for the journal entry. So net proceeds, we have 990,000 pesos less the carrying amount on December 31, 2023. So for the purpose of calculating gain or loss on disposal, we need to compare the net disposal proceeds from the carrying amount. Consequently, the carrying amount is equivalent to the amortized cost of the investment on December 31, 2023, which is 950,238. or this one. So 950,238. So in that case, 990,000 minus 950,238 equals 39,762. So 39,762. So this 39,762 is the realized gain on the disposal of the investment, which will be recognized in profit or loss in case of amortized cost investment. So let us journalize. So let's make this one a little smaller. So 12/31/2023. So sale of investment. So debit cash equivalent to the total proceeds, 1,070,000. So it was sold for 99 plus accrued interest, as we have mentioned earlier. Or maybe we can delete this one. And then credit debt investment in amortized cost equivalent to the carrying amount. So the carrying amount as per earlier, 950,238. So 950,238. So this is the amortized cost of the investment on the date of disposal, December 31, 2023, for amortized cost investment. Then credit interest receivable. So credit interest receivable of 80,000 pesos. So since the company will no longer receive the interest on January 1 of the following year, so it will be the new investor who will receive the interest. Now, in case the company has not yet accrued the interest, so the appropriate credit would be interest income as well. So it could be interest income in case there was no previous recording of the accrual. So, but since we have already updated the accounts before selling the investment, so then the appropriate credit would be interest receivable, 80,000. And then finally, gain on disposal of investment, which will be recognized in profit or loss. So as calculated earlier, that was 39,762. So 39,762. So let's check the accuracy of the entry. So let's add the total credits, 950,238 plus 80,000 plus 39,762. Okay, so as you can see, it's balanced with 1,070,000 debit to cash, equivalent to the proceeds received on the date of sale. So this will be our answer to requirement letter F on disposal of investment at amortized cost. Now let's compute for the gain or loss on disposal for investment in FVTPL. Now let's assume this time that the entity did not accrue for the interest at year end. So therefore, to compute the gain or loss, so we compute the net proceeds. So net proceeds is equivalent to the total proceeds of 1,070,000. So this is calculated earlier as the fair value 990,000 plus accrued interest of 80,000 pesos. So less the accrued interest of 80,000. So the net proceeds is 990,000. So less the previous carrying amount. So this is December 31, 2023. The previous carrying amount, December 31, 2022, is 980,000. So previous carrying amount. So we have 980,000. So gain or loss. So gain of 10,000 pesos. So this will be recognized in profit or loss. So since the investment is FVTPL. So in this case, December 31, 2023, debit cash So 1,070,000. So credit debt investment FVTPL of 980,000. So this was the previous balance of the investment. Credit interest income recognized in P&L of 80,000 pesos. So because this time we assume that the company did not accrue the interest on December 31, 2023. But if there is an accrual, then the credit would have been interest receivable. So regardless, that would be both acceptable. And then finally, gain on disposal of investment, which will be recognized in profit or loss of 10,000 pesos. So let's check. 980,000 plus 80,000 plus 10,000. So we also have 1,070,000. So balance against the total debit. So this is our answer for FBTPL. Now, finally, for investment at FVTOCI. So take note that at the date of the disposal, the gain or loss is calculated as the difference between the net disposal proceeds and the amortized cost, not the carrying amount of the investment at the date of disposal. Now, unlike in the previous categories, in FBTPL and amortized cost, the gain or loss is calculated between the net disposal proceeds and the previous carrying amount. So whatever the amount is reported in the financial statements or accounting records of our client. But this time for FVTOCI, the calculation of gain or loss is based on the amortized cost of the investment. And the gain or loss is recognized in profit or loss or P&L, even if the investment is classified as FVOCI. So finally, whatever amount previously recognized in other comprehensive income, the cumulative amount should be transferred to profit or loss through a process called reclassification adjustment. So there will be a reclassification entry. So to recognize the previous amount in OCI, transfer them into P&L. So because remember, previously, so there were items recognized in OCI like the 43,420 in 2022 and in 2023 also before the sale or the disposal. So that is why before we account for the disposal, so let us just update first the transactions for the second year 2023. So to update the amortization or the accrual and amortization for 2023, December 31, 2023. So accrual of interest. So we have this entry debit, interest receivable, 80,000, and credit interest income, which will be recognized in profit or loss at 80,000 pesos. And then also on December 31, 2023, amortization of the discount. So for 2023, it's actually 13,658. So based on our amortization table. So debit, debt, investment in FBOCI, 13,658. And credit interest income. So again, this is recognized in profit or loss. 13,658. Then finally, let's update the fair value adjustment. December 31, 2023. So fair value adjustment. So to be recognized in other comprehensive income. So to compute the fair value adjustment, so computation of fair value adjustment in 2023 is fair value December 31, 2023, based on the quoted price given in the problem, 99. So that's 1 million multiplied by 0.99. So 990,000 pesos. Less previous carrying amount or carrying amount before fair value adjustment rather. So carrying amount before fair value adjustment. So the carrying amount before fair value adjustment was the previous carrying amount plus December 31, 2022, which happened to be 980,000. So carrying amount 12/31/22, 980,000. And then in 2023, so we have one entry affecting FVOCI, which is the amortization of the discount at 13,658 debit. So it will increase the carrying amount of the investment. So plus amortization of discount in 2023, 13,658. So in that case, 980,000 plus 13,658. So 993,658. So the fair value actually decreased this time from 993,658 to 990,000. So there will be a loss. So less 990,000. So loss of 3658. So fair value adjustment loss, which will be recognized in other comprehensive income in 2023. So in this case, the entry is debit fair value adjustment loss in other comprehensive income, 3,658, and credit debt investment in FVTOCI, 3,658. Now, before disposal, we have to determine how much is the cumulative gain or loss in OCI. So, during the first year, 2022, the OCI recognized was this one, gain of 43,420. So, 43,420. And in 2023, the second year, there is a loss of 3,658. So, minus 3,658. So, we deduct it because the other one is a gain and this one is a loss. So, the cumulative amount in OCI is 39,762. So, cumulative balance in OCI, 39,762 gain. So because the gain in 2022 is higher than the loss in 2023. Now, this cumulative balance in OCI, so which is presented in shareholders' equity, will be transferred or derecognized upon disposal of investment in FBC OCI debt securities. So this is only applicable for debt securities. So because for equity securities, the balance in OCI is not transferred to PNL, it will remain in OCI. So although the entity has the option to transfer it directly to another item in equity, like for example, the retained earnings. So but this time there is a reclassification adjustment that will happen for the reason that the security involved is that investment at FBOCI. Now, to determine the cumulative balance in OCI without uh, calculating the individual gains and losses per year. So because in some problem, the question might be or the situation might be disposal on the end of the fourth year or the fifth year. So it will be very difficult to compute the cumulative gain or loss on a per year basis. So the shortcut is to compare the fair value at the amortized cost. So the difference between the fair value and the amortized cost is the cumulative balance in OCI at each year end. Now, for example, if we'll extend our amortization table here, so let's say, let's put a column for fair value and OCI in equity. We'll also compute the cumulative balance at year end. So in 2022, the fair value was 980,000. So the cumulative balance in equity is 936,580 minus 980,000. And this is gain because fair value is higher. So 43,420. So remember, this is also the amount recognized in OCI in first year. And this is also the cumulative balance because this is the first year of the investment. There is no beginning balance. So the cumulative balance at the end of the first year is also 43,420. Now in second year, the fair value is 990,000. So compared to 950,238, so 990,000 minus 950,238 amortized cost, you get, we have 39,762. So which is the same that we have calculated earlier when we calculated the cumulative gain or loss on a per year basis. So the shortcut is just get the fair value at year end and compare it to the amortized cost. You would already get the cumulative balance in OCI for that year end. So in this case, 39,762 gain. Now to compute the gain or loss, so computation of gain or loss, we get net disposal proceeds. So which is also equivalent to the previous calculations earlier, 1,070,000 less accrued interest of 80,000. So we have 990,000. But this time for FVOCI, the comparison is not carrying amount but amortized cost. Amortized cost on the date of disposal, December 31, 2023. So refer to the amortization table. The amortized cost on December 31, 2023 is 950,238. So therefore, the gain or loss to be recognized in P&L. So this is P&L, 990,000 minus 950,238. We have 39,762. So therefore, the journal entry to record the sale of investment, so December 31, 2023 also. So we have debit cash, 1,070,000. And then there is a reclassification entry. So the gain of 39,762 cumulative in OCI will be recognized. So since it's a gain, the reclassification entry is to debit so that the balance will zero out. So debit fair value adjustment loss in OCI or other comprehensive income of 39,762. So that after this entry, the balance in the OCI, the cumulative balance in OCI would have been zero. So this is what we call reclassification adjusting entry or reclassification adjustment. And this is applicable only here in debt investments classified at FVOCI. And then credit debt investment in FVOCI. So which is right now has a balance of 990,000 pesos. So this is the carrying amount. So since we adjusted the fair value earlier of the investment on December 31, 2023, it would have been equal to the fair value on December 31, 2023. Then credit interest receivable, since there was an accrual of 80,000 pesos, and credit gain on disposal of investment, which will be recognized in profit or loss. So based on our computation, 39,762. So this will be our entry to the recognize the debt investment in OCI now as of December 31, 2023. So let's check the total debits, 1070 plus 39,762 minus 990,000 minus 80,000 minus 39,762. So zero out. So our entries are balanced. This is our entry. So if you will notice, there is a transfer of OCI to PNL with this particular category. So it's unique to that investment carried at FVOCI. So that's it, no, for our requirements A to E for each type of investment in amortized cost, FVTPL, and OCI. So thank you very much, everyone.